duty. As we gain valuable experience from repeated waves of the pandemic, our response and our overall responses are also becoming nuanced and calibrated. Protecting life is paramount, and protecting livelihood is rising in the hierarchy of priorities. The focus is on securing the economic and financial conditions of the vulnerable, the wage earners, and all those who have been affected the most. Accordingly, the emphasis is shifting to targeted containment strategies and a push towards universal vaccination and booster doses. This approach is being complemented by increased adoption of technology in our workplaces and in our day-to-day lives. The effort is to limit the extent of disruptions to the economic activity. In this overall environment and this background, the Monetary Policy Committee, that is the MPC, met on 8th, 9th and 10th February 2022. And based on an assessment of the current macroeconomic situation and outlook, it voted unanimously to keep the policy repo rate unchanged at 4%. The MPC also decided by a majority of 5-1 to continue with the accommodative stance as long as necessary to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID-19 on the economy, while ensuring that inflation remains within the target going forward. The marginal standing facility, that is MSF rate and bank rate, remain unchanged at 4.25%. The reverse repo rate also remains unchanged at 3.35%. The MPC flagged the potential downside risks to economic activity from the highly contagious Omicron variant. Reassuringly, the symptoms have remained relatively mild, and the pace of infections is moderating as quickly as it surged. There is, however, some loss of momentum in economic activity as reflected in high-frequency indicators such as purchasing managers' indices for both manufacturing and services, finished steel consumption, and sales of tractors, two-wheelers, and passenger vehicles. The demand for contact-intensive services is still muted. Going forward, positive impulses for quickening the pace of recovery emanate from buoyant Rabi prospects, robust export demand, accommodative monetary and liquidity conditions, improving credit offtake, and the continued push on capital expenditure and infrastructure in the Union Budget 22-23. The MPC also noted that consumer price inflation has edged higher since the last meeting, but largely along the anticipated lines. The increase in inflation in December was entirely due to unfavorable base effects, despite month-on-month decline in prices. Large buffer stocks of cereals and effective supply-side measures augur well for food inflation. Core inflation remains elevated, but demand pull pressures are still muted. The renewed surge in international crude oil prices, however, needs to be closely monitored. On balance, headline inflation is expected to peak in Q4 21-22, that is in the current quarter, within the tolerance band, and then moderate closer to the target in the second half of 22-23, providing room for monetary policy to remain accommodative. At the same time, output is just barely above its pre-pandemic level, while private consumption is still lagging. Global headwinds are accentuating. Overall, taking into consideration the outlook for inflation and growth, in particular the comfort provided by the improving inflation outlook, the uncertainties related to Omicron and global spillovers, the MPC was of the view that continued policy support is warranted for a durable and broad-based recovery. I think this particular sentence is very important, so let me just read it once again for better clarity. Overall, taking into consideration the outlook for inflation and growth, in particular the comfort provided by improving inflation outlook, the uncertainties related to Omicron and global spillovers, the MPC was of the view that continued policy support is warranted for a durable and broad-based recovery. I would now like to focus on the domestic growth scenario. In India, real GDP growth at 9.2% for 21-22 takes it modestly above the level of GDP in 2019-20. Private consumption, the mainstay of domestic demand, continues to trail its pre-pandemic level. The persistent increase in international commodity prices, surge in volatility of global financial markets, and global supply bottlenecks can exacerbate risks to this outlook. Going forward, government's thrust on capital expenditure and exports are expected to enhance productive capacity and strengthen aggregate demand. This would also crowd in private investment. The conducive financial conditions engendered by the RBI's policy actions will provide impetus to investment activity. The surveys done by the Reserve Bank reveal that capacity utilization is rising, and the outlook on business and consumer confidence remain in optimistic territory, which should support investment as well as consumption demand. The prospects for agriculture have brightened on good progress of winter crop sowing. Overall, there is some loss of momentum of near-term growth, while global factors are turning adverse. Looking ahead, domestic growth drivers are gradually improving. Considering all these factors, real GDP growth is projected at 7.8%. I repeat, 7.8% for 22-23, with Q1 22-23 at 17.2%, Q2 at 7%, Q3 at 4.3%, and Q4 at 4.5%. I would now like to turn to inflation. The CPI inflation trajectory has moved in close alignment with our projections. In particular, the softening of food prices is providing welcome relief. The improving prospects for food grains production and the expected easing of vegetable prices on fresh winter crop arrivals are adding further optimism. Moreover, the softening of pulses and edible oil prices is likely to continue in response to strong supply-side interventions by the government and increase in domestic production. The hardening of crude oil prices, however, presents a major upside risk to the inflation outlook. Core inflation remains elevated at tolerance testing levels, although the continuing pass-through of tax cuts relating to petrol and diesel last November would help to moderate input cost pressures to some extent. The transmission of input cost pressures to selling prices remains muted in view of the continuing slack in demand. Further, as risks from Omicron wane and supply chain pressures moderate, there could be some softening of core inflation. On balance, the inflation projection for 2021-22 is retained at 5.3%, with Q4, that is the current quarter, at 5.7% on account of unfavorable base effects that ease subsequently. In particular, CPI reading for January 22 is expected to move closer to the upper tolerance band, largely due to adverse base effects.
RBI के गवर्नर द्वारा मौद्रिक नीति का अनावरण किया गया, हालांकि ब्याज दरों में किसी तरीके की बदलाव नहीं किया गया है। और इस खबर के साथ ही यहाँ एक छोटे से ब्रेक के लिए रुक रहे हैं, लेकिन जल्द हाजिर होंगे।